Thank you, Mr. Cordray, very much for being here. I appreciate it. Now, my understanding, sir, is that you run a new agency here in Washington that is an independent agency within the Federal Reserve with about 1,450 roughly employees in Washington. Is that correct, sir?
We're about 1,400.
And my understanding is that you really, because of the regulations that you folks go through, whether it be automobile loans or car loans, or someone wanting to add on to the convenience store, you regulate all the finances that reach into all of our families across America. Would you say that's just about right?
With the exception of if it's a business loan, convenience store, you said adding on to convenience store, we have consumer
okay, that's close enough. But you understand where I'm going with this, Mr. Cordray, don't you? Okay.
Yeah. No, I would say I agree that we affect 320 million Americans.
Okay, so you're essentially the consumer protection agency within Dodd-Frank that's responsible for not making sure taxpayers don't get ripped off, right?
Consumers don't get ripped off.
My understanding, Mr. Cordray, is that you have a 5-year term appointed by the President. Is that correct, sir?
And confirmed by the Senate.
Okay, great. And during that period,
a while.
And during that period of time, I believe you don't report to anybody. You don't have a board of directors you report to?
I do not have a board of
directors.
directors.
Okay, fine. And the Federal Reserve, through their earnings, funds your operations, but since there's no appropriation from Congress, there is no oversight from Congress on what you spend your money on. Is that correct, sir?
Not correct.
Okay, that's not correct.
Not correct.
Tell me how.
So we're like every other banking agency in the Federal Government where we're not appropriated, but we're subject to oversight.
By whom?
We're doing it right now.
Yeah, but that's not the same thing as reporting to the Board of Directors, because also, sir, with a 5-year term, you can't be fired, correct?
Hold on.
You can't be replaced.
You want me to, the oversight.
Quickly, I'm done.
We have the GAO audits our finances annually. We have an independent audit by statute. We have an inspector general that looks at us carefully. I testify in front of this committee twice a year.
Twice a year.
I now do a briefing with the House Appropriations.
Okay, so you claim there's plenty of oversight. Would you explain to me, sir, and so I can explain to the hardworking families that I represent in western, central, northern, and down East Maine, who happen to be the most frugal, hardworking people you can possibly imagine, that can stretch a dollar further than you can ever imagine, tell me why that you have a plan to spend $216 million to renovate an office building you don't own. Now, also, if I may.
Do you want me to answer the question or not answer?
No, not yet.
Okay.
And if I'm not mistaken, is that I think there's supposed to be a 2-story waterfall in that building with a splash pool and a daycare center downstairs and a playground on the roof. Is that correct? Do I have this right or have I got this wrong?
Okay. So I think you got a number of things wrong there. And by the way, I was the state treasurer in Ohio, and I represented frugal people, just as frugal as the people you talk about in Maine, I'm sure.
Then tell me how I'm wrong here, sir.
So, number one, it's apples and oranges to talk about spending $215 million. The core construction costs, as we've said all along, are in the range of $95 to $150 million.
Are you folks in an office building right now?
I'm trying to answer your question.
Yeah.
You want me to answer your question or not?
I want to make sure that we get right to the point why you think it's prudent to take taxpayer dollars to spend $216 million to renovate a building you don't own.
Okay. Number one, we're not spending $216 million to renovate a building. It's less than half that, okay? So that's the apples and oranges difference. Second,
so it's $110 million, roughly.
Second, the government owns this building, and we got a break on our rent where we're going to pay Class C rent for the next 30 years to take account of the renovation costs. And overall, it is a market deal, okay? So it is sensible.
$110 million is a market deal. Okay, fine. Well, in Maine, it doesn't work that way. Let's try to end this on a positive note, Mr. Cordray.
Okay.
Okay. There are a bunch of small community banks in our district and a bunch of credit unions. And they have very long, deep relationships with our families in the 2nd District. And we have a lot of seasonal workers up there. Maybe someone's dragging for flounder or someone's lobstering or someone's working in the tourist industry.
Yep.
But our banks and our credit unions know these people. And they want to be able to lend to these families. Maybe someone needs to put a new diesel in his lobster boat. And they've known this family for many years. Why don't we exempt any small community bank and credit union from what I call these character loans, such that we make sure your agency, your bureau, does not choke off credit to our families who really, really need it? I am very concerned about making sure our small businesses and our families can get the loans they need to live better lives and grow their businesses and take care of their families. Don't you think that's a good idea to go down that path, sir?
That's exactly what we're doing.
Terrific. Well, I encourage you.
That's exactly what we are doing, okay? So it's not a criticism of what we're doing. That's what we are doing.
Well, and
you tell me, and I'll be interested to know, which banks in Maine have less than $2 billion in assets and make more than 2,000 mortgage loans a year, not counting anything they keep
How about
in
if we-
portfolio,
why don't
those
we-
are all
why don't we, sir, I've
those
got an
are all
idea
given
for you.
special treatment under our rule.
I've got an idea for you. Instead of having thresholds where the number of loans deal with or relate to the QM, why don't we just say, if these community banks are traditional banks, they're taking in deposits, they're lending out money, there's no risk to the secondary market, they're taking full responsibility and risk for those loans, why aren't they all exempt?
That's fine. You tell me which bank in Maine is not exempt under our proposed rule. I'll be interested to know. I believe there are very few, if any.
Well, there
Okay?
shouldn't be any.